what's up guys and welcome back to this YouTube channel. It's your girl Neetu here.
And it's your guy Igor here.
Guys, today Neetu has a crazy video for you. It's about getting a mortgage if you're self-employed in Canada. The reason she has that video for you guys is once you're self-employed in Canada or you're planning to become self-employed, don't quit your job before you watch this video until the very end, because you're just about to find out that you're in a whole different game in Canada in terms of getting your mortgage approved.
That's right. It's a little bit more complicated than actually when you're working for an employer, when you get your pay stubs. That's like foolproof, confirmed income that you're going to get every pay stub. So banks have more faith in you, more faith in your employer, more faith in your income stream, right? So they have a whole lot of different stream on, and it's pretty easy in how to get a mortgage, right? But when you're self-employed, you actually will have to prove how and where and what exactly are your expenses for the business. So in this video, we are going to talk everything about self-employment and how do self-employed business owners like yourself will be qualified to get a mortgage.
A quick introduction: if you're self-employed and you're about to start your business, you'll probably not get a mortgage for next 2 years. But we'll go through this video. It might not have to be that way. I have an expert here, Neetu. She's a mortgage broker with DLC Clear Trust Mortgages here in Calgary, Alberta. And guys, her contacts are in the description of this video. And let's begin.
Okay, so the most important thing for you when you start a business is income, right? Income is the main source that consists for a mortgage. Your income to debt ratio is what everybody wants to know. So when you start a business, make sure you have 2 years of experience and 2 years of provable income that we can prove through tax documents or through business bank statements. So there are different and variety of lenders who can even get you qualified with as low as 5% of down payment and up to 20 or 25% of down payment along with some kind of lending fee. So we'll get into that later. But what I want to talk before and firstly is that let's say you have an excellent credit score, you have been actually declaring your taxes, let's say about 80,000 to 100,000 on your tax documents. That's either in terms of a salary, let's say T4, or in terms of dividend for T5, or in terms of any other T1 general, like a regular tax document that proves all your income. So if you can prove that, then we should be able to get you qualified for a mortgage within that income. Now, the biggest concern, I don't know if you have noticed, is that many people, many business owners don't really actually declare this income because they have a variety of sources. They have various expenses they would like to write off, and they would want to use some other way, other form to actually prove this income. And that's where alternative lending sources come into play. Now, what's the difference between A, lending or banks, and B, lending or alternate business sources, right? So the biggest thing for A, lending is that let's say if you have proved, you've declared all your income from your business on your T1, T4, or T5, and you have 2 years, then banks will be like, okay, perfect, this is what we need. And based on whatever you've declared on that tax document, we will be giving you a pre-approval based on that. And you can go as less as 5%. Because if you're buying your primary residence, right? Let's say on the other hand, you still have the best, excellent credit score, but you do not have actually an income, which is where you are looking for to get you qualified, the kind of house you want. So let's say your income on your tax document is 50 or below that, and you are looking for a detached home. And what's the range of detached home right now in Calgary? somewhere between 600 to 700 or even $900,000.
Depends on what you want to get. Something crappy and old, 600,000. Something
Okay.
new and laying home from a builder, 750-ish. Or in a cheap new community without the garage, without the basement, maybe 650. But if you want like 2,000 square foot, 2,400, 2,200 square foot, and a legal basement, which you're looking at upwards of 950.
Okay, well then you'll have to say sell off your kidney for that. I'm just joking.
No, it's not going to be enough. Just
Okay.
so you know, it's not your kidney is not going to do it. But I'll tell you one thing before you to continues. I have a business owner, a multimillionaire, a client of mine who is saying, Igor, the banking system in Canada is so stupid that he has 40 employees and his admin assistant can go to the bank and get a mortgage. But he says he's best friends on B side. He says B side is my friends now because he says Canadian banking system doesn't want me, doesn't like me, and they look down at me when I walk in. And even though I create jobs and I have the money and I can show the revenues and I make enough money that people make in a year, they wouldn't give me a mortgage. So I don't like Canadian banking systems and I only have to work with mortgage brokers. Now, just to give you an idea, guys, in terms of like wealth, even if you think you have the money and you are a business owner, it does mean nothing to banks. That's why you need a mortgage broker. Anita is going to explain to you more on how it works in terms of mortgages for bill lending. So in that, guys, what are the I would say, Nito, what are the main challenges for self-employed people, like the one I'm just mentioning?
The main challenges would be that you don't have adequate income proved on your tax documents, right? So we would have to go alternative lending sources where obviously the top five banks are not going to
The
say.
dark side.
Maybe one of the reasons why Trump wants to destroy that and break the monopoly on the top five banks, and they want American banks to come and compete. Maybe we could see some kind of flexibility in that area. But right now, in Canada, we have something called as alternative lending. What they do is that they would be very flexible as compared to as compared to their banks, and their main criterias are: number one is you would need 20% minimum down payment. And then you would also need a lending fee that's anywhere between 1%, and it would go higher if you want to go pursue for a private lender. So private lending would be a step, again, next step after B lending.
So there's three steps.
Yes.
One is A lending, then it's B lending, and then there is private lender. So there is three categories.
You can say C lending.
Yeah.
So private lenders would be charging a fee anywhere between 2%, 2.5% to 3.5%.
So would they show up with the baseball bat at my house if I don't pay up, Nito?
They will just take your home if you don't pay.
Okay. Because from back home, private lenders scares me, but in Canada it's different,
It's
right?
civilized, yes.
I thought similar. I almost had a heart attack for a second. Okay.
So what exactly do the alternative lending sources they want to see from your business side, right? So they would want to see anywhere between 6 months bank statements to 12-month bank statement. They want to see when exactly you started your business, so business license, and they would want to see your accountant made financial statements. Now, what does that mean? That means a statement that shows balance sheet for the previous years and income and expense statement. We call it profit and loss statement, but here they call it income and expense statement. So we would need that to assess along with your bank statement to see what exactly are the expenses that we could omit in a way to increase your income for this particular lender.
Oh, so what you're saying is, for specific lenders, there is a different calculation that you
Yes.
can do, and they are okay. If for Canada revenue, let's say, you are looking at those expenses and they fall under certain tax codes as expenses. But
Right.
the lender could still close one eye and they would say, yeah, according to our policies, this is still an income.
Yes. Well, they
Oh,
would remove that from the income expense statement. Lower the expense, the higher the income would be, right?
yes.
So they would maybe possibly remove those kind of expenses that they would be saying that, okay, this is qualified and we can remove this. And a main example is like a car loan, right?
Yeah.
So if you pay car loan and is used for your business and you can prove it's been paid by your business bank statement and on your business name, most likely that's going to be omitted, and that itself is going to drastically increase your mortgage pre-approval.
So that is basically an extra flexibility. What I understand, Nito,
Yeah.
is that you can actually, yeah, you're basically more flexible in that way to get a higher amount
Yes.
because of this B lending.
Yeah.
Now, guys, I want to tell you something about B lending. You know, you go to the bank and somebody in the bank, they didn't know I was a real estate agent. I work with eXp Realty, and that my wife was a mortgage broker, and we didn't disclose any of that. And the lady there who was working there, she was like, B lending? Oh, that's bad lending. I was like, what? And the funny part is two real estate professionals. She was a little bit embarrassed after she figured out who we are and after she tried to use that manipulative, misleading statement to people who actually understand how it works. But I gotta tell you guys, it's just flexibility in order for people for self. If that didn't approve, if that didn't exist, and you were a business owner, you probably wouldn't own a home, and that's the reality.
Right. So maybe we can give our example on how we used B lending for our own home. Why don't you say in simple terms?
In simple terms, I went to the to different banks, and they all said yes, 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 we'll get it done. Let's book an appointment. That's what the banks do. They just want to get an appointment with you, and then they sit down, and then they chat with you, and then you figure out quickly, rather quickly, that they cannot do it for you because you're a business owner. And then they start either judgmentally looking down at you, that saying that, oh, you didn't pay enough taxes, maybe you have to refile your taxes. Or they would say, well, maybe you can go, and they'll try to refer you to a buddy of their mortgage broker who might be able to approve you on the B side, the one that yesterday they still told you that was bad side.
So, or even worse, such people from the bank, I don't want to say who exactly, but people from the bank, I've been told by my clients that they have really asked these clients to wait and see how exactly their business does in the next year, and maybe ask your accountant to poof off your income next year. But what you don't really know is that next year the house prices are going to go 100,000, 150,000 higher.
We
And
don't
what
know.
exactly the increment this person told you, at that point, it's not going to work and you're not going to be qualified. So, meaning that you're going to be losing that buying power the same year, and you're also going to be losing that extra increment, property increment, that you would have had you gone to a private lender the previous year, right? So
Same thing with immigration and same thing with banking. You never know what the conditions are going to be in a year from now. Will the interest rates go up? Will the Trump's tariffs are going to come up? Because, like just few days back, I went to the builders and I was demanding to get the prices for their homes for my clients, and they wouldn't give it to us. And I'm saying, so why not? They're like, well, we don't know Trump is putting tariffs on Canada. I'm saying, what does that have to do with that? And essentially what the builders are doing, they're like, hey, if Trump puts tariffs, just like during, the pandemic, we can just say that, oh, everything went up in price, so we want more money. So in that way, some builders are holding on to lots, to their land. They are business owners. They are there to make money. It's not charity organization, regardless how politics are trying. They want to make money. So in that way, they would hold on to the land rather than give it away, to give it at a premium. And now they have an excuse saying that there is a tariff and there is a new pricing now for that. So you don't know how things are going to change up in the next 3 months. 30 days Trump has given to Justin Trudeau. We don't know if it's going to be there or not. So in that way, what I would say, Nito, I don't know if you agree or not, if you are able to qualify right now and you need a home to stay stay or you want to invest, the best time and certain time is just right now. We don't know how things are going to be in a year from now. We don't know if the prices are going to be up by $150,000 or not. Even right now, the market is slow, but there is a forecast in Calgary that is going to go up by 7% in this 2025 year. We don't exactly know how it's going to turn out, but let's wait and see. We might even have American mortgage system if they make a deal with United States. We don't know yet, but what we do know is that if you're able to get it done right now, the best time to think about it is just to think what you can do right now and not try to, time the market. If you time the market in the future, many things can do. There is a saying in Russian language, I don't exactly remember the quote, but it's about taking a mortgage. It's about taking a mortgage. And the statement is that when you're borrowing money for a donkey, essentially, there is two outcomes for that. By that time, maybe the guy who you borrowed the money from is going to die, or the donkey is going to die, so you don't have to really repay it. So that's kind of I don't exactly know how to translate it properly into English, but that's an old kind of national wisdom saying, and I would say the same thing with mortgages. It's like you don't know how it's going to be. Either the bank is going to collapse or the housing market by that time. We don't know.
But the best thing about B lending would be is that you don't really have to get locked in for like 5 years. You really have the option to take a mortgage for 1 year. If you go for private, you can even take for 2 months or even 1 month, I've heard. And then refinance once your principal payment has come down, once you have increased the house in value. So that means your equity has gone up. So now with your previous income, not actually inflated income, you would be able to qualify on the A side. So that's actually a strategy, a graduation program that I can help you go, if you're interested. And most of the banks, they will just say, sorry, we don't do that. Maybe you should come next year. So other than that, what exactly is required? So let's say if you are self-employed and if you also have a lower credit score. A lower credit score is something which is below 650. Right? So if anything is below 650, even on the B side, A side, they are going to take it case by case, even if you give 20%. On the B side, they would say, yes, we would take it. We would like to know what exactly caused that score and how exactly would you be able to improve it, right? And obviously, sometimes there are certain cases where they will not be happy only with 20%. They might ask you 25 or even 30%. Because the risk factor is more and it's a proof in your credit history showing that your credit score is low, and it also it also may get you a higher interest rate than what you would normally qualify for if you had a better credit score. So there are certain ways on how exactly you can improve the credit score. You can always feel free to contact me. And I'll be able to, we actually have a program on how exactly you can help yourself improve your credit score in a matter of 6 to 8 months. Anybody who says that below 3 months you can get your credit score improved, I don't think so that's possible unless and until you pay off huge amount of debts, or you have an inheritance, or you have a lottery that you've won and you've paid off all your debts.
So this is, guys, we want to answer a question. I wanted to ask Nito that question, why you should be working with the mortgage broker, but I'm going to just answer that, why you should be working with the mortgage broker. Because if you go by the unqualified advice of a financial advisor in a bank that gives you credit cards, lines of credit, and other things, and that are, sometimes they call themselves mortgage brokers, but they're not really licensed mortgage brokers because they're exempt from the regulators requirement, and they don't know much because they have so many products. It's like catering to all sorts of people. But long story short is, before they give you an advice and you go and you're like, okay, I'm going to go refile my taxes, you pay a bunch of taxes to Canada Revenue, you exaggerated your incomes, your accountant ripped you off, government of Canada has ripped you off, and then you came back and they still didn't give you a mortgage because it was a it was a
Prices have gone up.
No, it was a BS advice that didn't actually
Okay.
work because the guy didn't even know how it works. So this is why you need a
Yeah.
mortgage broker who can help you strategize to understand what are the options. Whether okay, if you pay an increase, reduce it, you can carry forward your expenses with your CPA. Accounting advices go to CPA. So you're working with your accountant, mortgage broker, lawyer, a realtor. You have to have your own people everywhere you go if you're a business owner. And if you don't have those people, you'll have to get them eventually. And it's a good time to start now. The contacts will be in the description of this video. But regardless, guys, so for example, if you are going to a mortgage broker, you would at least know, okay, if you pay more taxes, what are the benefits? You know, what, for example, if you go to the B side, yeah, there is a lending fee. So you can qualify on the B side, let's say with a mortgage broker. You know, is it going to be cheaper than to exaggerate your taxes? Let's say how much money is on that side, on this side, and a lot of times it's going to actually make more sense not to refile your taxes and you know, exaggerate your incomes and play around just to show your higher income than you actually have in reality, and pay off to that. Then, you know, with the interest rates and other things, those calculations, those are the calculations that mortgage brokers can help you figure out better. So you'll be like, okay, I was about to do that, but it would have been a dumb decision, and now you can do that. So it helps you financially plan. Sometimes mortgage brokers can guide you in terms of like next 6 months. For example, if you're running your business for 1 year and now it's about time to file your taxes, well, it's about time to reach out to a mortgage broker and ask, hey, what do you think should I do? Should I do this or should I do that? I have to tell my accountant exactly what needs to be done, and then they can guide you through their part. And then with that paperwork, Nito can tell you what paperwork she needs from you, whether it's on this side or on that side, and that's what with the outcomes. And then you can figure out what financially makes more sense for you. That's basically it's all about saving money and making
Yeah,
money.
the main thing is that you don't go into that sinkhole where everybody is pointing you on the interest rates. Like, you have to make your calculation, a cost to benefit analysis on what exactly is what. Yes, on the bank side, you might be able to qualify for, let's say, 4%, but on the B side, you might be able to get for 5%, 5.5%. Yes, 5.5% is higher, but here you're also paying CMHC insurance. Here you're not paying because you're paying 20%, right?
Yeah.
On top of that, you can increase your amortization to up to 35 years, sometimes up to 40 years.
Well, you can do
So yeah, you can do that. So there are many options available on the B side. So it's completely your choice what exactly works for you,
Yeah.
and what is the risk that you're willing to take.
And that extra 1% of your interest payments can cost you another $40,000, I don't know, in taxes and other filing fees and other things. So you really think you're saving a little bit, but you just lost way more. And you could have probably used that money as an additional down payment. Instead of going 5% in CMHC insurance, you're saving on CMHC insurance, you could have just put it down into your property and have a 20% of mortgage paid off. And you paying off into your property is literally putting your money back into your pocket, essentially. So those are the differences that nobody in a bank even wants you to know, because banks don't want you to go to anyone else. They want you to stay with them.
Not only that, when you come to a mortgage broker as a business owner, like myself, I will always see to accommodate you on the A side. Let's say you have 20%. Let's say you still want, 4.5% income, or, with that 20%, you still want lower monthly mortgage payment. I can still make it happen on the A side. We don't really have to go right away to the B side, if at all, because you should be able to work with a broker who wants to see all the options.
Yeah.
Not only just say that, okay, here's the option, this is the only option available to you, and that's that. So
I know one of those mortgage brokers, a really famous one. I'm not going to be naming names in this video, guys, who is like, this is your only option and this is where you sign. And that's kind of, guys, I think that's a bad business practice to just not give you any options to your clients. But I like those kind of mortgage brokers because more clients come back to Nito rather than going to that person specifically, because of more transparency and better care. So guys, yeah, we want to see if you're a business owner, guys, when are you planning to start? What's your goal?
Yep.
What's your business? Leave a comment down below. And also, guys, just before you gave your resignation letter, just before you did something like that, and if you're in the process, maybe maybe give a call to a professional mortgage broker and see what your options are. Your options could be better at your position right now before you quit your job, because later on, if you start your own business, you might be on the hook. Do you really have to do 2 years in average income?
Well, it depends. If you have been working in the same industry and let's say you've been working as a plumber or a fitter and you've actually bought that business, you don't really have to show it 2 years.
Okay, so that's exactly why you have to call Nito to find out, because I wouldn't know that and you wouldn't know that. And then you'll be like, okay, and now your wife is pregnant. Oh, so if you're a guy like me and she wants a house, but you just started your business and now you have to wait and you have to rent for 2 years, let's say, because she's going to be
Not always the case, yes. So there are
This is another reason
there are
figure it
cases
out.
where you can even get qualified with less than 20%. So that's one more thing that I would say.
And how about AI? Like if you're on AI, do you qualify only income on the AI, or it's also not the case always?
Well, as long as the employer says that we are willing to take back the person who went on mat leave on the same employment.
So there, guys, there is so many questions you will have that would need to be answered, and well, the contacts are in the description of this video. Guys, leave a comment down below and subscribe to this channel. You know, unlike anything else, it's free actually. It's not Netflix where you have to pay a subscription. It's free on this channel. It doesn't cost you anything.
But we hope that with the value that we give, you please return back the value of whatever we give and come back to us when you need a mortgage or you need to buy a house.
Guys, I believe that people who find the value in it, they'll call you. Don't worry, because that's you know, we gave so much of information that other mortgage brokers are even terrified to reveal. They're thinking that that's something so proprietary they don't want anyone to know. We are upfront available and giving you those advices for literally free. See you guys soon. Bye for now.